The housing market in Illinois hasn't made many headlines lately, but that doesn't mean nothing is happening. Prices are still rising, inventory remains tight, and buyers are making decisions in a market that feels stable on the surface, but pressured underneath. As we move toward 2026, those pressures are starting to matter more. In this video, we're breaking down what the data actually shows, how Illinois' housing market is performing today, where demand is holding up, and why the next year could be a turning point for buyers, sellers, and renters across the state. To understand where Illinois is heading, we need to start with where it is right now. Across the state, home prices have continued to rise through 2025. According to Illinois Realtors, the statewide median home price climbed to just over $300,000 by late 2025, up more than 5% from the year before. That price growth is notable because it's happening at a time when affordability remains strained and mortgage rates are far higher than they were just a few years ago. Yet buyers haven't disappeared. Home sales across Illinois have held relatively steady, and in some months even increased year over year. That tells us something important. Demand has cooled from its pandemic peak, but it hasn't collapsed. In the Chicago metropolitan area, the trend is even more pronounced. Chicago's median sale price is significantly higher than the statewide average, and prices have risen faster than inflation. Homes are still selling, and in many neighborhoods, they're selling quickly. This combination, rising prices, steady sales, and limited supply, is a key theme that defines the Illinois housing market today. If there's one issue shaping nearly every conversation about housing in Illinois, it's inventory. Inventory refers to how many homes are available for sale at any given time. And across much of Illinois, that number remains historically low. In a balanced market, buyers typically have several months' worth of homes to choose from. In many Illinois markets, supply remains well below that level. This shortage didn't start in 2025. It began years earlier when construction slowed, population growth shifted, and demand surged faster than supply could respond. Then came the pandemic-era housing boom, which drained inventory even further. Today, many homeowners are effectively locked in place. They purchased or refinanced when mortgage rates were extremely low. Selling now would often mean taking on a much higher monthly payment, even if they bought a similar home. As a result, fewer homeowners are listing their properties, and fewer homes are circulating through the market. In places like Rockford, this effect is especially visible. Homes there are spending very little time on the market, sometimes just days. Buyer interest remains high, and competition can still push prices upward. Low inventory doesn't just affect buyers. It puts pressure on renters, limits mobility for families, and makes it harder for first-time buyers to enter the market at all. Illinois is not a single housing market. Chicago operates very differently from many of the state's smaller cities and rural areas. In Chicago, job density, transportation access, and long-term demand continue to support housing prices. While certain condo markets have seen more variation, single-family homes and desirable neighborhoods remain competitive. Suburban markets around Chicago tell a similar story. Many families continue to prioritize space, schools, and commute flexibility. That has kept demand elevated in areas that offer relative affordability compared to the city, even as prices there have risen sharply. Outside the Chicago metro, the picture becomes more mixed. Cities like Rockford have gained national attention for their affordability and rising demand. Buyers priced out of larger metros are increasingly willing to look to smaller Midwestern cities where home ownership still feels attainable. At the same time, not every market is growing at the same pace. Some Illinois cities have seen slower appreciation or flatter sales activity. These areas often face different economic realities, population trends, and employment dynamics. The takeaway is simple. What's happening in Chicago may not reflect what's happening everywhere else, but the pressure of limited supply connects them all. Affordability remains the greatest challenge facing Illinois buyers. Mortgage rates today are significantly higher than they were just a few years ago. While rates have stabilized compared to their recent peaks, they remain in a range that materially affects monthly payments. For many households, the difference between a 3% mortgage and a 6% mortgage is the difference between buying and waiting. And yet, many buyers have adjusted. They're putting more money down, choosing smaller homes, or expanding their search areas. Others are delaying purchases altogether, contributing to pent-up demand that could return if conditions improve. First-time buyers face the steepest climb. Rising prices, higher borrowing costs, and limited inventory combine to make entry into the market more difficult than it's been in years. This is where the pressure quietly builds. When affordability strains persist long enough, they don't always cause immediate price drops, but they can reshape demand over time. Despite the challenges, people are still buying homes in Illinois. Many of them are millennials entering their prime home buying years. Others are families relocating from more expensive regions, looking for stability and value. Remote and hybrid work has also played a role. For some buyers, proximity to a major job center matters less than it once did. That flexibility has helped support demand in suburban and secondary markets. At its core, housing demand isn't just financial, it's personal. People buy homes because they need space, stability, and long-term security. Those motivations don't disappear just because conditions become more difficult. They adapt. Looking ahead to 2026, most forecasts point toward moderation rather than collapse. Price growth is expected to slow, not reverse dramatically. Inventory may improve slightly, but not enough to fully relieve pressure in many markets. Mortgage rates could ease somewhat, but a return to ultra-low rates appears unlikely in the near term. That creates a market defined by tension, not overheating, not crashing, but strained. If something breaks, it's more likely affordability than demand itself. Illinois' housing market isn't driven by hype. It's driven by pressure, supply constraints, and slow-moving structural forces. As 2026 approaches, the biggest changes may not come suddenly, but quietly. Because in housing, the most significant shifts often happen before anyone agrees on what to call them, and by the time they do, the market has already moved.